Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extends gains against the weaker US dollar on Tuesday following the rebound from a 1-month low near the 60-day simple moving average, and from there has rallied into the third consecutive day as easing Middle East tensions reduced demand for the safe haven US dollar. Reports of a ceasefire between Israel and Iran helped ease market nerves, prompting a shift back to risk assets. Meanwhile, in Washington, Federal Reserve Jerome Powell began his two-day testimony before Congress, warning that Trump's tariffs could raise prices and complicate efforts to controlling inflation. Meanwhile, Trump responded by calling Fed Powell very dumb on his social media, blaming the Fed's rate stance tied to his own politics for harming the US. Anyway, beyond the geopolitical risks, investors focus now on the US inflation concerns driven by the tariffs, with May personal consumption expenditure, or the PCE index, seen as the Fed's preferred inflation gauge, due out this week along GDP, housing data and consumer confidence reports. While in Australia, the upcoming CPI release follows a previous reading of 2.4%, matching forecasts. So looking at the technicals, all eyes again is on that top side level of 65.40.45. I do anticipate there is stops above this region, and if we do see a break above 45, it could prompt a rally onto 66 to 66.65 and reassess from there. We may find a bit of resistance as we come towards this top side level of 65.40.45, but with stops generating a potential move up, any weakness is likely to be temporary, with minor support seen at 64.65. With the euro also maintaining a very firm stance since breaking above 116, now looks on towards the region of 116.65 and maybe on to 117.1040 before profit taking emerges, while the dollar still remains weak around 97.5. That could see a move down to 96.5. Beside Fed Powell, federal officials maintain a cautious stance amid the impacts of tariffs, with many Fed governors describing a wait-and-see approach. Any pullback on the euro? Well, the trend is still seen very firm around 114.25.35 and the immediate support seen at 115.75. After the bull trap was in place, a very long wick suggests that the market may have potential to the downside and look to 142 before the break's likely to be hit. Do note below there that 140 is still a very key level, because beneath 140 gives a little imagination to support to around 127 to 130. So 140 is a big level, but we still got 140 to challenge, as many times has held. Any upside attempts? Well, the weakness may come back into play above 145.15, and with 145.5 maybe see supply returning. The sterling also rallied, and with Andrew Bailey giving little indication on rates, the market is still maintaining a somewhat bullish case and maybe seeing a move now towards 137 to 137.5, with support seen around 135.70. Commodities still remain weak as we get closer towards this trend line, seen roughly around 3,275. Overall, though, bargain hunters are likely to be lurking and maybe find support in front of that level of 3,300 figure 15. But as I mentioned, this is a key level from the trend, and every time we've hit it, the market's rebounded, and if so, could see another rally back to the all-time high, 3,500. Turning to oil, well, the market remains under pressure on Wednesday after a steep decline over the past two sessions, as investors weighed the stability of the ceasefire between Iran and Israel. Prices have surged to a 5-month high recently following the US attack on Iran's nuclear facilities over the weekend, but sharply reversed as a fragile ceasefire appeared to hold despite the Iranian missile strike and a subsequent Israel attack on Tehran. US President Trump expressed strong frustration with Israel over the ongoing hostilities, stating that he was very unhappy with Israel. Meanwhile, multiple US media outlets reported that Trump's strike on Iran's nuclear sites did not fully destroy the facilities, only delaying Iran's nuclear program by several months. Turning to the technicals, I still hold a neutral view. this is still a very unstable pattern and very much to the trading side difficult. So I'd rather wait for better opportunities. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the day.